going on, guys? Good morning. Welcome back to another live stream here, pre-market, with the Everyday Growth Advisors, which is soon going to be Timeless Finance. I hope you guys had a good weekend, and I just wanted to jump on here very quickly to give you guys the rundown on what we have been looking at for the past week. After FOMC last week, obviously we had a pretty nice bullish movement from the markets after Jerome Powell confirmed that the Fed is staying with its existing interest rate policies, and at the same time projecting about 3 rate cuts this year. Remember where we were at the beginning of this year and what I had said back then. We were talking about the fact that the Fed was going to make 8 to 9 rate cuts, right? And I said that the market is detached from reality and the Fed is detached from reality, and eventually inflation is going to remain sticky and will not allow us to have that kind of a deal. Now, ever since then, the market's tune has changed, but the market is continuing melting up, driven by a lot of the secular trends within AI and the overall bullish run for AI-related stocks, which has held up in terms of majority of your Magnificent Seven, which have all pretty much integrated AI into their technology somehow or another, right? Apple now being the latest one. Google was one of the first few after OpenAI. Meta has been at it for a long time. Microsoft partnering up with OpenAI. Tesla has been already using AI for a long time. NVDA selling AI chips. Netflix yet to integrate AI, but I believe that they will very soon as well, right? And then Amazon with AWS already integrating AI a very long time ago. So all of the Magnificent Seven have literally already jumped on the AI bandwagon, causing a lot of the market valuations to kind of saturate and cause that big run that we've been seeing. Where does this momentum start to slow down? How do we get back to some form of normality? When does a correction happen? If we had the answers to this, we would all be very, very rich. But the reality of the situation is you don't need to guess when that is going to happen, because at some point of time it will happen, right? And if you just look at the simple idea that the moving averages are very, very spread out and they're all pointing up, then there is no reason for us to get super bearish just yet. The trend is your friend, and the more you realize that in market moves and market cadence, the better, right? So at some point of time, of course, we will get the S&P 500 coming back to the $5,000 level. We will have the S&P 500 potentially come back and retest the 4,900 level. But this will happen in the future, and we don't need to exactly catch when that's going to happen. We just need to accurately predict that it will happen within the next couple of months. Now, adding on to all of this, remember that this year is a presidential election year. And so I've mentioned since the beginning of this year that the returns for this year will be more bullish than usual, and we will see the stock market energize a lot of the returns for this year because of it being a stock market year where elections are taking place. That's going to add to the already bullish mentality that the market has in terms of where price action will be by the end of the year. If you guys remember, 2 to 3 months ago, I called out 5,300 being the 61.8 Fibonacci extension, and we're not that far away from it now, right? Just 70 points away from 5,300, if we can come back to retest the 5,200, which is right here, moving into the 4-hour chart here, you'll see coming back to the 5,200 level is going to double up as a bounce on the 50 moving average and a key level in which we had previous breakout, right? So this level is now going to be looked at for potential support for the further extension to the 5,300 in the next 1 month or so, okay? When does the market correct deeper than that? We don't need to predict it, okay? The only thing we need to know is if we start breaking below 5,200 and then we start rejecting 5,200, that's where we start, okay, now we need to start thinking about a bearish situation. We need to start thinking about protecting our capital, right? As of right now, we don't have that need. Now, last week, my trading performance was still pretty relatively okay if you look at it. Let me just pull this into a way that's easy for you guys to see. So my P&L for the whole of this past week was minus $850, okay? I had some hedges on the S&P 500, which ended up with a lot more gains on my equity. So this was a well-placed hedge that allowed me to protect my downside while keeping my upside still, right? So I cut out the hedges whenever that I saw that they didn't go my way, and those were all just the cost of doing business in last week. If you just don't count the hedges, then last week was a profit of roughly about $2,700, and for the year, I'm currently sitting at about $8,666 in profits, right? So I'll be moving that into this sheet this week, and then the sheet will be having some other trades. Now, I did take some VIX options that you guys are aware of. The VIX $17, $18 debit spread, which had a cost basis of 29 cents per contract. I took 100 contracts of that. Small hedge over there costing me about $2,900. And then I have another VIX hedge of the 17-19, so a wider spread at 55 cents, allows my success rate to go up, but then lowers my risk to reward ratio with a higher cost basis of 3,800. So those are two hedges. I also have a rolled XOM positioning, which I have been speaking about for weeks. XOM, when we called it out, it was trading at 106 roughly, right? 106. When it was breaking out from here is where we called out XOM. Since then, it has made a huge run to the upside. So if you played this, congratulations. It hasn't slowed down here. And remember, you have a supply zone above you in the 118, 119 range. So I just used my profits that I made from here to here and dumped them into some contracts that I rolled up and further out in expiry to 17th May. Very simple trading opportunity there, and we just took that opportunity and turned it into some money, right? And then we've seen some other kinds of trades that we've been looking at for the past week, and I obviously put them all on the Discord. And remember that we have some big announcements coming in this week. And those of you that are attending the live streams, I think you're aware, our Discord is going to be opening up our doors for free members. Free memberships means you don't need to pay anything. You can join. Obviously, you won't get all of the access to the channels, but you will get a new role which I call the Phoenix role. And in this Phoenix role, you will have access to the snipe list weekly, which are opportunities that we put out, the technical channel where you can put your charts here, and you can get feedback for it. You'll have access to the trading room, which I will be looking at very closely, and if it gets too messy, I'll be creating a new trading room for premium members, a general chat where we just shoot the shit, crypto room. You'll have access to the tweet flow bot, which is a carefully curated amount of people that we follow that provide financial information. You'll have access to the classroom where you can ask questions, put down your confessions, have trade recaps done for you, and also your profit and losses. Not to mention, you'll have access to all of the basic video links that we have on here that will allow you to take your learning to another level. Okay, so that's one thing that's going to be happening this weekend. Another thing that's going to be happening this weekend is that we will be holding the 3-day bootcamp for the Everyday Growth Advisors event. Now, just to put it out there, and I'm being completely transparent here, we have a total of already right now 124 signups as of this minute. Okay, and this has been increasing very, very sharply since this past week. Now, for the Zoom call, we're only going to be allowed to host a total of 100 people. Now, I don't think that we'll have everybody joining the bootcamp at the same time, but for the individuals that join, first come, first serve basis. Obviously, I will not be able to track who's going to join first and who's going to join second, but I will be sending out the link to every one of the signups, and then the first 100 people that get into the Zoom link will be accepted into the classroom. Okay, if you can't access the classroom and for some reason it's full, what you're going to do is you're going to wait till after the session, because I will be uploading it onto YouTube in a unlisted link for the first 1 month, so that you all have access to that first. Okay, I want to be fair to people who have signed up versus not signed up, and then you'll be able to access the links on the YouTube link that will allow you access to those 3 videos. Okay, so every day I'll post a link and I'll send it out. Okay, and then continuing on from there, after about a couple of weeks, I will give access to the general public and everybody else for the 3-day bootcamp to people who have not signed up through the Google form. Okay, so I'm being fair. If you put in urgency and you were one of the first few people that signed up, you will get access. If you don't put in the urgency, then you simply just don't get the urgency back. Okay, it's just simple and fair. Okay, so let's look at SPX here. Very close to the 61.8. Of course, we need to retest 5200 to get some liquidity, and also retest this breakout level here for forming of support. That will lead to upside. If we continue breaking further down, then we want to use 5200 as a key pivot point for rejection. So this is either your upside pivot or downside pivot right here for both bulls and bears. Bulls can secure a bounce position at 5200. Bears can only secure a bearish position upon the rejection of 5200. And then on NASDAQ, you have a similar situation playing out where you might need to retest the 18,000 level, and that will become the key pivot here. A bounce level here for further upside, or a breakdown after rejecting this level. So that will be the two things that I'll be looking at. IWM, which is your small mid caps, which we've been talking about for weeks on end now. And I spoke about it building a nice base in this region after it's come down here. It saw some nice rallying last week with some decent volume as well. I'm looking for this one to continue its leg higher. If it can break out of 209, that will be 215. Now for those of you that don't know, I already have a long position on IWM, right? It's already here, you guys can see it. I literally deposited money to take this position. It has a $45,000 risk allocation in my portfolio, okay? This is almost like a capital allocation. This is a big position that I've allocated. About 20 contracts of the 195 calls for 20th December, right? They are in the money calls. The reason why I went in the money is because I want that sweet delta appreciation. It's a macro / leap position, which will be well positioned to make money if interest rates start to fall, or the perception of interest rates start to fall, okay? So that's one of the trades that I have already set up. I just want to keep putting it in front of you so you understand that this is a trade idea that is a long-term trade idea. The US 10-year Treasury rate, which is something that we spoke about last week, came down and then got bought up into the Fed meeting, and after the Fed meeting is now coming straight down again, likely to form a range in this area. So you're looking at this range between the 4% all the way up into the 4.35% roughly, right? Likely to go range bound for a little while until inflation calms down and the Fed is more clear about its balance sheet situation, right? And then you have the dollar index, which was being rallied for most of the week, and after Fed got even more stronger, the dollar against a basket of other currencies as well as gold, right? And you can see that the dollar has been trying to flirt with this level, but looks like we are also forming a range on this one between the 102.35 or 102.39 and 104.60-ish, right? So that will be the new range that we'll be looking at for the dollar index here, probably a bit higher actually, like somewhere here, right? And we have interim levels here, so it looks like we have a little bit of a pennant forming right now. If we get rejected further higher here, move further down, there will be a pennant here that will eventually form, which we will be able to use. The VIX still at around the $13 mark. I'm not really worried about this. We have those hedges. If the VIX start to rally above at the $17 level, I'll be in the money and making money on the positions that I have. And that could take months to come. So the preparation for that is simply to take the debit spreads that I have already, which are July expiry, and that's sometime in line with the next Fed meeting, right? Now, if you read this week's newsletter, you'll see that we have a very simple alert that was given to us by the Goldman Sachs prime broker. Healthcare has been on a tear. We've been seeing a lot of inflow into this sector. I'll be watching this sector closely, but it's been mostly biopharma that has been rallying, and so not really the sector that I personally like to trade, okay, because it's very high volatility. So I will be staying out of this sector entirely because I'm not really that well versed with it. Somebody's asking for a SPY analysis. I just gave you the SPX analysis, which is very simpler. For those of you that don't know, you should be using your time looking at SPX 500 USD instead of looking at SPY, just so you know, because SPY doesn't take into account all time zones. Even though I know that you guys think this is a very liquid ETF and tracks the S&P 500, you need to realize that this is not as accurate as this because of the time zone differences. Okay, and also because this takes into account all sessions that occur between London, Asia, Europe, and America. Okay, and you should take your time to instead study SPX 500 USD instead of spending your time studying SPY, because SPY is just an ETF that is tracking the SPX 500 USD. I hope you know that and you are aware of this. Okay, but if you want a SPY a SPY analysis. One of our members does that on Discord, and I can show you. His name is Andrew. He's one of our longtime members, and he puts it in our premium update channel. He gives the gamma exposure of the market, as well as his plans every single day. So as you can see, his SPY, I think he was projecting for, let me see, I think his plan, yeah, this was his plan. The plan was a potential pullback at the 513, 515, which is something that I think happened last week. Let me see 1 second. So 515 was here. This was the expected pullback, but then we had FOMC after that. I think the expected range was because there was a lot of dark pool at around the 516 level. Anyway, we broke above that now. And last week we saw $2 billion worth of SPX contracts being bought, as well as gamma exposure now sitting at 527, right? We also have almost 12 billion in dark pool for SPY the whole of last week, okay? And the key levels for SPY are at your 522 level here, which is exactly where we are. So expected to come down and retest some of these levels on the bottom here, which are around your 515, 516, where your next dark pool levels are. And they've been continuing, so institutions have been adding calls on the dip, not much put buying so far. And also 4 or 5, he said, will be important because they have bought some 529 calls and sold some 527 calls, as you can see here, for the 5/4 expiry, April 5th, right? As well, so you can see here they sold the 527 strikes in terms about $10 million in premium, and they bought almost 6-7 million in the calls. So as long as SPY gets above 527, then dealers will be squeezed to the upside. This is the thesis. And somewhere here you can see individual trades that were put in, almost 2.5 billion at 521, another 2.7 billion here at 521, another 1 billion here at 521, another 1 billion here at 521. So there's a lot of activity that went on at that 521 level, which is an important level. So that's just some of the info that you can find on the Discord, which is important, okay? So that's your SPY analysis. I hope it's somewhat helpful for you. But for most cases, I don't look at SPY, I look at SPX, because this is more informational for a trader who's trying to trade this on a daily basis. Okay, some top bets that came in last week. Let's talk about that. And then that's all we're going to be talking about for this session. Let me show you guys. So, very quickly. Top bets. First, Solar saw some 160 calls bought for April expiries. This was about 1.27 million in premium. Okay. Amazon saw some March 28, 167.50 calls, about 1.3 million in those. Marvel Semiconductor, $68 calls for April, about 396,000 in that. Snow, you had two types of contracts. You had 167.50s and 162.50s for March 28 bought to open. This was total of about 300 premium. This is more like a lotto size positioning, so I wouldn't really pay attention much to that one. But the rest of them look pretty decent, and these will be some that I'll be watching for this week heading into the session. Okay. Others, as you can see, repeat Marvel flow. Now these were from May and about 500,000 in premium. This is more probable, right? TSM, it saw some inflows for May 150 calls, about 300,000 in premium. QCOM, September 185 calls, 500,000 premium. CrowdStrike, January 360 calls, 1.5 million. This might be a share replacement, right? And then American Express, AXP, saw July 230 calls of about 500,000 in premium. So these are some of the top bets from last week that I'll be watching, and I'll be charting out during today's session in the snipe list for opportunities and how to play them. Okay, so that will be sorted out. I will more than likely on Wednesday I will give everyone who wants free access to the Discord free access. Would you guys like that? Those that are here, I will give you guys first access to the Discord, the free access on Wednesday. If you would like that access, please tell me so in the comments, or also you can DM me and ask me for it, and I'll start, slowly rolling out the access to individuals who want access to the Discord for free. Okay, so remember, your free access is going to be quite limited, but you will have the option to upgrade, okay, at any time. So I hope to see all of you guys in the Discord. Now, I'll be signing up premium again in a month or so. Oh, that's going to be nice, Shoei. I hope that you're doing okay. It's been a while since I heard from you. I was wondering where my favorite mod went. Nice to see you back again, Mark. Appreciate you. Okay, so, well, I don't have much else to add in terms of market positioning here. Really simple. Keep your pivots clear. Don't trade until and unless you see an opportunity. I'll be posting more updates on the opportunities that I've seen. FCX, we spoke about this last week. Remember, we got a huge breakout on this. Who remembers this one? Man, I wanted to play this and then didn't get to get the move on this one. Getting my head on my butt, being resurrected like Jesus on the Easter subway. Yeah, well, I think you need more than that. You know what? You should DM me on Discord. Let's talk, because I think you might need some personal help, and I'm willing to put in the work since you're one of our oldest members. So reach out to me. Also, I want to put it out there, just for the sake of putting it out there. As you guys know, I only take 8 students per 8 students per quarter for one-on-one mentorship, and I have 2 slots open right now, which are likely to be taken up within the next 1 to 2 weeks. If you are keen on the one-on-one mentorship experience, I highly recommend that you reach out to me and schedule a 30-minute informational session so that we can figure out if that is a fit for you. Okay, I'm just putting it out there that there are 2 slots and they're likely to be taken, but if you reach out to me first and you close out the slot first, it's yours. Okay, but I will only be allowing 2 more people to join the program, and then next quarter we'll have the rest of you guys opening up. Okay, Disney got an upgrade this morning, and we've been watching it for the past couple of weeks, but remember, this is a very difficult spot here to actually take some upside exposure, because it's been on a rally for a while, and at the same time it's likely to pull back for a retest and then start rallying again. So not really that important, and I'll be watching this just in the next couple of weeks. Meta, I like this setup for a potential rally further to the upside, but not really that much. MSTR, this was Bitcoin play, has been rallying pretty significantly, got bought up. Another one that I'm looking at is Sunrun, which is in a downward channel here. Apple with its bounce on this very heavy demand zone down here. Coinbase does not give a F anymore about anything of what Bitcoin does. This just trades on its own now. Uber, remember we spoke about this one last week? I told you guys there was a great dip buying opportunity down here, right? I even posted this on Instagram, if you guys noticed. We called the bounce here. Since then it moved pretty nicely and violently up here, right? So pretty nice one on Uber. I managed to close out some of my position on this, and let's see, I think I did let's see, oh, it's not on here. It's I haven't put this position in yet because it was last week. Baba's still dying. AMD is down massively this morning because of semiconductor competition from its counterpart NVDA, right? So this one's getting blown over here. Okay, let's answer some of these questions. Yes, we'll join free access. Thanks for now. No problem. Nice to see you, Jacques. Back on the live streams. Joseph, if I want exposure in my long-term portfolio, which is the best, XLK or VGT? The expense ratio isn't that much different from each other. Well, VGT is Vanguard Information Tech, okay, or XLK. Well, go for the one with the lower expense ratio. That's how I would choose personally. Whichever one is even 1% lower or point something percent lower, that's the one I would go for. Just saying. Gotta go to work. Don't forget to smash the like button. Thank you. Yes, please smash the like button. I appreciate it. Sold OIH in my IRA. I'm using the money to deploy with ET and SLB. What are your thoughts on starting position on FANG and these levels? Will need to buy on dips. I would say don't start any positions in this current market climate. If you have missed out on the run, wait for the deeper correction, which will happen at some point down the road. Okay, there is absolutely no reason for you to rush into assigning your risk right now. Build a good amount of dry powder. That means money, cash, sitting on the sidelines, whatever that you have to harvest in terms of losses, harvest it. And then when the time comes and I give you guys the next spot in which I'm going to enter long, you can use that as your signal entry. Remember the last times that I told you guys about signal entries were these two spots right here. The first one was back when the S&P 500 bottomed out and made 2 consecutive higher lows, right? This was the first one. In March of 2023 was my first bullish call out. The second one was in November 2023 when we came down at the end of this channel. This was the next call out right here, right? This was a reiteration of the buy opportunity, and since then we've had a huge rally. Now I'm not saying that I am some prophet here, don't get me wrong, okay? Do not get this twisted. I am just saying that there are smarter ways to employ your capital, and this is not the right spot to do it. I would wait personally, okay? So when the time comes, then you can deploy into whichever part of your portfolio that you want. But right now, wrong time to deploy, because I can almost sense a correction will be coming in the next couple of months. And when that comes, you should be ready with some dry powder. All right, that's all I have for you guys today. I hope that you guys have a good trading session. I'm going to jump on and I have quite a bit of things to do today. So I'll be kind of paying attention, but not paying attention today. I'm not that hopped up on overly trading this week. If anything, I might take a intraday short position on SPX. That might be something that I will look at. But more than likely, we'll be taking it pretty chill until I see a conviction trade, high conviction trade. But I'll be posting all of the opportunities on the Discord snipe list by today so that our members have access to it. And then on Wednesday's live stream, I'll give you guys access to the free Discord as well, anyone who's here. Okay? Take care, peace out, have a good day, and I'll see you all on the next one. Bye, guys.